Hello, hello, hello. What a wonderful day. I am Kay McCrae, and this is Tuesday. It's our noon time of coming together on August the 22nd. Wow, time is moving. This is video number 10. Wow. While we have a moment, if you would share and just put it out there for me. It's going to be a little bit more of a serious talk today, but I just want to come and share some things on this wisdom nugget time on our 65-day journey to 65. Wow. Woo! What a day, what a day, what a day. So today the topic is going to be a little bit maybe serious. If you see my shirt, I hope you can. Yeah. We're going to talk about buy what kind of life insurance? Ooh, that's a subject a lot of people really don't want to talk about. But on my 65-day journey to 65, to this age, it's something we have to talk about. Yeah, we have to talk about these things because it's a little serious, but it's for real, the real today. Yeah. So if you're ready, buckle up. Let's do this thing together today. This is video number 10. Buy what kind of life insurance? We say. Wow. I have my notes for me today because we're going to talk about a few things that I just want to share with you today. I've share it with you that my profession has been that of insurance. I've been licensed since 1984. That's like the big dinosaur in the room. Yeah, I've been around a minute. And also, I am a real estate broker. That's what I do. I do both together, but that's been my profession. In addition to, first and foremost, is the Word of God. I'm a licensed and ordained minister as well. Okay. So, and I'm talking about life insurance. In starting out in 1984, I worked a debit. That's how I got my license. And working on this debit, I would come to, you can say grandma's house. If you remember, there used to be a nail on the wall. And there was a book that hung on this nail for this debit person to come around and would take the book off the wall and would mark it on a weekly basis of what is being paid for that week. And those premiums at that time, they ran anywhere from $1, literally, to $10. Now, if I had a $10 a week collection from one house, they had a lot of people on there. Sometimes she had her children, she had her grandchildren, and everybody had a little portion of life insurance. Believe it or not, those life insurance policy range anywhere from $500. And if you had a $5,000 death benefit policy, wow, that was a lot. We talking 1984. So it's been a minute. So we considered that as being, honestly, death insurance or final expense. You may hear that word today. But what grandma did and mama, they was trying to put some security there for the children or the grandchildren in the event or whenever, death is inevitable. We all will leave. We just don't know the appointed time. But there is a time when the beat will stop for all of us. So life insurance is a form of security as far as meeting a financial need. Because, when death occurs and we have to call that funeral home, they don't work for free. Literally, they don't. They like you, but they don't like you that much for the simple reason that it is business. And if you see my shirt, I have a couple things on here and I have it marked off. But the first is that dealing with what? GoFundMe, right? I want you to hear my heart. Hear my heart. Hear my heart. My heart is that when we can do better, we should do better. Now, GoFundMe is a crowd fund platform. And what that means is everybody can contribute to a mission, your mission, a cause, by contributing toward if someone have medical bills that are just, wow, outrageous, and they need some help, or they need a transplant, or whatever it may be. It is a platform. And it's also a platform in the event that you're donating to somebody that is homeless, and you're trying to help them get more of a security of somewhere to live. Or let's say, we talk about life insurance today, but we're talking about somebody died and we don't have the money to take care of that. Wow, somebody's at my door. So we may use this crowd fund to actually support that on that GoFundMe page. So when we set up that GoFundMe page and people are pouring in and money is pouring in and help is pouring in, that's a great thing. But I want to present some things today that you may know and you may not know, but I'm entitled this little part called, But Did You Know? When we use that crowd fund of GoFundMe and the money is coming in, did you not know that if an individual is receiving any government assistance, be it on Medicaid, that money is now counted as income? Wow. It says income. That's the way they look at it. And by being income, it means that if I were able to get government assistance, or I was able to get into a housing complex because of my income rating, or if I was able to get some food stamps because I really need some help, now all of a sudden you may be knocked out of that because now your income is increased. Did you not know? Did you know? Did you also know, by using the GoFundMe platform, that money is now reported? And as is reported, now it deals with your income taxes. Do you report that on your income tax? It's income. Did you know? Did you also know that, let's say, for example, that what you're needing the money for has the final line is $10,000, that you're going to use this money. You're trying to raise $10,000 that you are going to do. Okay, we talk about life insurance today, so we're going to do a burial. And it's $10,000, and your friends and family and loved ones and people you don't know, well-wishers, they start sending money to your platform, and now you have $15,000, okay? Of that $15,000, all money costs money. Never think free is free, because free is not free. The platform is going to take a percentage off the money. Yeah, it's a business. And if you clear $12,000, let's say we $15,000 was given, and now it's $12,000. But you only needed 10. So there's a $2,000 increase. If the money, that the purpose was for the 10,000, you get more, again, it's going to be rated as income to you. But if the money that is allocated for that specific project, all the money has to go for that specific project. If not, then there can come at some point, there could become where there is accountability, and they're saying, what did you do with this money? Because the money is for a specific reason. We're talking about GoFundMe today on that side of things. So now that you know that, and I've shared all of that, and we don't want to do a fish fry, and we don't want to do a cookout, we don't want to do any of those things. We want to get to the point that we buy some life insurance. But buy what kind of life insurance, you may say? Well, one of the reasons I wanted to share this with you is because I've actually talked to people that have purchased. We're going to start with two types of insurance. We're going to talk about the term insurance today. and a whole life policy. We're going to talk about only those two types of insurance. There are others, but we're just going to look at term and whole life. There have been people that have talked to me that they had term insurance and we talked later, and after they had bought it, they didn't buy it for me, but they really didn't know what they bought. So when I say buy what kind of life insurance, a lot of people honestly don't know. This may not apply to you, but it applies to someone. When we think about buying term insurance, and you see on the television, and the television said, oh, you can get it for $100,000 for $17 a month. Yes. But I want to present to you, on this wisdom nugget, I want to present to you an individual that I'm going to do a projection on. And that projection is this individual is of the age of 38. This person is 38 years old, it's a male, and the male don't smoke. So the male has an opportunity of purchasing a $250,000 life insurance policy, but it's term. And this term is going to last for 30 years. Okay? So the person, again, is 38 years old. For 30 years, we're going to do the math, and that equals what? 68. Okay. What does that really mean? Okay. 30-year term. A term is simply what it means. It's for a specific length of time. This is 30 years. This is a long term. It's 30 years. The person bought it at 38. They're young. They're able, they're working, and they bought $250,000 of life insurance for their family in the event that they die. Remember, we all have an expiration date. It's only when the stop, right? The beat stop, the heart. The person is expected to have this insurance till they reach the age of 68. This is a 30-year. Remember, they bought it at 38, so it's 30 years, so it's now 68 years old. And what happens in the event that the person live beyond 68 years old? Remember, it's a specific length of time, which is 30 years. The person has now exhausted all of that. They have paid into this insurance policy for 30 years. Let's look at that. So for 30 years, they paid $34.34. So 30 years, there's 12 months in a year times 30. So that's what, 360 payments that they're going to make, right? In this 30-year period of time. So when we do the math on all of that, they paid in $12,362.40 is what they paid in. Now, this they have for a $250,000 life insurance policy, but they're still living. So what is going to happen now? Well, there's other variables that come into play. The person now is at the age of 68. Now they're going to have to buy some insurance brand new because they outlived the term insurance. They're 68. They now decide maybe they're going to start smoking between that 30-year period of time. Or maybe they've had some health issues that came along that period of 30 years. But they're going to have to go through underwriting to make sure that they can now buy insurance. But the problem is, chances are, at the age of 68, being a male, because males insurance costs more than female, because females outlive men statistically. Okay? Now they can't afford, chances are, maybe they can't afford to buy the $250,000 insurance that they had at the age of 68. So they outlive the insurance. That's a consideration. When you see on TV and they saying $17 a month. Yeah, wow, that's good. But what happened if you continue to live, right? And that's the objective, right? People are living longer for that reason. People are living into their 80s, 90s, 100s. Okay, so consider that. So they would have to actually go through some underwriting to see whether or not now is consideration of my budget at 68, not 38, 68. Where am I now? Am I working? Do I have good retirement? as far as money's coming in. Where am I at this age of 68, at this example that I'm presenting to you? The other insurance that I want you to consider is the whole life insurance. And I know you've heard of that. And it means just basically what it says, whole life. Because with the term insurance, there is no cash value built up. When it ends, it ends. You put the money in, you didn't die, you lived, you outlived the policy. So the money you put into this policy, it no longer exists. Expired. The whole life insurance means just what it said. You pay for it your whole life. But there's some differences between the term and the whole life. The whole life is that it develops, it is growing in some form of a little cash value. The insurance policy does not cancel unless two things. Number one, you stop paying. Naturally, you stop paying. It terminates. It expires. It ends. Or you die. Either way. With the term insurance, it will terminate if you stop paying, yes. But it also terminates when you die. And when you live, that's the difference. Term, you live beyond the time. Whole life, you just continue to pay it and you live. And at the moment of death and the death claim is filed, the insurance will pay out. Well, the difference of the term and the whole life as far as premium money per month. The term insurance, you can buy more term for less monthly payments than a whole life policy. Let's look at that example. Male, 38, non-smoker, $250,000 of whole life. I use an example on that I want to share with you. Let's say, for instance, that premium is $120. The projected premium is $120 a month versus that term of being $34.34. So if we premium driven, $34 sound good to me. $120 for $250,000 worth of insurance. So let's say we're using 68 because remember the term insurance was 30 years and it expired at the age of 68. So if you paid $120 a month, 360 payments, that's $43,200 that's been paid into this policy. So let's say, for instance, that the person died at 68, where the term just ended because the person outlived the insurance. You paid $43,200, but it's a $250,000 policy. So you paid in $43,200, but it's a $206,800. I won't say the word gain, but if we're talking business, you what it cost you is a cost, and the back end is the difference, right? We're talking today about front end and back end. Term is a front end thing because I can get all of this insurance for less money, but on the back end, it's going to cost you. And that's just business from that standpoint. You have to decide where you are. That's the golden nugget that I want to share with you today and talking about buy what kind of life insurance? You have to make those decisions because your objective is to continue living. Well, case in point, Penn State University did a survey. They did a survey of term insurance companies. All these term insurance companies, all these companies, life insurance companies that sell term insurance. Did you not know that 99% of those insurance companies do not pay out? Only 1% of all the insurance companies pay out term. Why you think that is? Because people outlive the insurance. Wow. That's a lot of money in it. Think about it. So that's something to consider on that when you think about buy what kind of life insurance? I know you have to take in consideration your budget. You have to take in consideration a lot of things of where you are. But you can start at some point. Your plan is to continue to live, right? As long as you possibly can. But what happened when you outlive the term insurance policy? Wow. That was just a little wisdom nugget that I had for you today. And I hope that it brought some light to someone to understand the difference of the two. Because believe it or not, a lot of people really don't understand it. They just see the big picture. In business, always remember, front end or back. There's no such thing as free, because free ain't free. Yes. I'm Kay McCray, and this is August the 22nd, and this is video number 10. I come to you on Tuesdays and Friday at noon. If you would share, like, and subscribe, I greatly appreciate it. You have a great day, and have a great day intentionally. Until next time.